Good afternoon. Welcome to our September 30th special edition USDA crop report analysis. This was the date for the quarterly grain stocks report and small grain summary report. So we're going to go through the data, talk about its implications, and where we go from here. There's a lot of things to talk about. Probably not the surprises that we typically or oftentimes get in the September 30th stocks report. I know corn traders are simply breathing a big sigh of relief that they didn't have any big surprises in the stocks numbers. That's where we've seen some real big surprises sometimes in the past on September 30th. We did see some surprises primarily in wheat, not many in soybeans at all, and not many in corn, but primarily in wheat. So as we go forward and we look at this, let's keep in mind the perspective that the outside markets do matter, money flow matters. Price is still a function of supply and demand, but is modified by the flow of money. So always want to look at the fundamental data that the traders are looking at of supply and demand through the filter that fund managers see it. And so what drives the money? Where's the money going right now? Overall, the dollar we see kind of in a convergence zone, a triangle, if you will, you see on the right-hand side, and kind of tightening, trying to determine direction it should go. It's receiving some downward pressure from a strengthening yen as investors there in Japan are dissatisfied with monetary policy and pulling their overseas money back home and converting it to yens, raising the value of the yen and sticking it under the proverbial mattress, if you will. That's been helping to pressure the dollar. On the other hand, we're getting support from weakness in the euro and expectations of weakness in the euro as problems in Europe continue to mount. Particularly this week, all the talk has been about Deutsche Bank, Commerce Bank, a couple of the banks highlighting the problems with the financial sector in Europe. And why wouldn't they be having problems with negative interest rates similar in Japan? But when you add into that some of the other problems in Europe with the Brexit vote, with the refugee crisis and some other things, the euro has a lot of obstacles ahead of it, and that's stronger for the dollar or supportive for the dollar. If the Fed would have raised the rates at the September meeting, I think we probably would have seen that balance break to the high side. They did not. That kept us in the trading range. Now we're anticipating a December rate hike possibility, 50-50 chance of that. Some of today's data that came out created a reversal in the dollar. It had been stronger, but then it on the weakness of the euro, but then it reversed when we had some data come out showing that August personal spending by the consumer was basically flat. And so traders start thinking, that may just delay that rate hike. So the dollar came back from its earlier gains, came back down. And we also had chatter that maybe Germany would bail out Deutsche Bank. And so that lifted the euro. And so we find ourselves still in this converging pattern, not providing any clear direction on money flow for the broader commodities, which find themselves in a similar pattern. Of course, as we've talked about before, notice the inverse relationship. The stronger the dollar, the weaker the commodities as a whole, this being the CRB index measuring that, and vice versa. And then when you look at the money flow into corn, soybeans, and wheat, a good correlation there between the broader commodity sector and what we see specifically in corn, soybeans, and wheat. Now, let's look at today's numbers in light of that and in light of the uncertainty of the outside markets, where the outside market's trying to determine, are we going to see the dollar break higher and money flowing out of the commodity sector, or are we going to see it break lower and money flood into the commodity sector, which is the general relationship. No guarantees on that. So we look at the numbers and we see the all wheat number came in about 12, 13 million bushels below what the trade was anticipating, but 17 million bushels below what we expected, and certainly 11 million bushels below where USDA was last month. Oh, that's just scratching the surface. That's the beginning of the story. So we say, okay, a little bit smaller wheat crop, that's supportive. But then you look at the hard red winter wheat crop at 1.082 billion bushels. That was well above the 1.048 that USDA forecast in August, which is the last time they adjusted it. And it was 33 million bushels above where the trade thought it would be. On the other hand, we saw soft red winter wheat crop at 345 million bushels come in well below where USDA was and well below the trade estimates. So in opposite directions, and therefore we saw differences in the classes of wheat, but it didn't stop there. Hard red spring wheat coming in much smaller than expected as well. A big drop in hard red spring. And of course, durum much bigger than anticipated. White wheat also coming in bigger than expected. So some significant changes from class to class in the wheat. Some surprising to the upside, some to the downside. The bottom line was the crop was a little bit smaller than expected. But the bottom line also was we've got a lot more hard red winter wheat that needs to get fed. And so we'll look to the stocks report to see how well we're feeding. Remember, USDA is projecting that we'll feed 330 million bushels of wheat this year, the bulk of that being hard red winter, but also some soft in there as well. So we'll take a look at how well that's going. First of all, let's look at the production data that came out where they came from the winter wheat crop. Because of the big hard red winter wheat crop yield, pushed the winter wheat yield overall to 55.3 bushels. Now, the previous record was well below 50 bushels. So we thought, okay, we may top 50 bushels an acre this year. We topped it by more than 10%. So an outstanding winter wheat crop. Outstanding, to say the least. When we look at where it happened, well, we increased production and yield. Basically, we increased yield across the United States. But look at Kansas, up 20 bushels per acre from last year. Nebraska up 16. Oklahoma up 13. Texas very similar at 2, but that's Texas. It's adverse down there. But we see across the Midwest, we see yields up 9 bushel in Illinois. Indiana 13 bushel, Ohio up 13 bushel, and all 40 acres in Iowa were up 11 bushel. I joke about the 40 acres, but there's not much wheat in Iowa, so that doesn't mean much. But the winter wheat yields up everywhere that it matters, so to speak. Down in the areas of the desert Southwest where they don't grow much wheat, down in the Mid-Atlantic, Florida, and in Arkansas, but basically up everywhere else. And that, as we told you 6 months ago, is what to expect, although this is bigger than we expected. But we said at that point, back in February and March, we warned El Nino winters tend to yield big crops. And this one turned out to be even bigger than we expected. Looking at spring wheat yield, very disappointing in the core production areas of North and South Dakota and Minnesota. Yields falling from year-ago levels, but elsewhere the yields rose from year-ago levels, even though the overall production this year we saw from the August to September report, September 30th report, a reduction still above year-ago levels, and that's because of some of the big problems they had in the Pacific Northwest last year for the spring wheat crop. Now, as we look at the stocks numbers, I said let's pay attention, therefore, to the little bit smaller wheat crop. Where did wheat stocks come out? Now, I drew a few odd looks when I put out my wheat stocks estimate at 2.558 billion bushels, because my wheat feeding number was not 330 million that the USDA uses. Mine was 225 million bushels. And when you look at the percent of wheat fed of USDA's overall annual target for feeding, the percentage is all over the place of how much is fed in the first quarter of the marketing year, which would be June, July, and August. And so this is a little bit of an art, a little bit of a guessing game, a little bit of getting lucky, so to speak. But anyway, what I did was took that 225 million bushel level and then looked at the percentages in years when we fed similar amounts, what percent tended to get fed in that first quarter. I wish I could remember the percent I used at this point, but there was some fairly good consistency in those years that had similar feeding levels in the percentage, and I applied that percentage, and then based on Census Bureau data on exports and typical domestic wheat flour usage put in for the first quarter, came up with my estimate of 2.558 billion. Had my production estimate, which was just 6 million above USDA's August estimate and very close, I think within 1 million of where the trade was, had the size of the crop come in, I would have been really close. I was still one of the closest analysts on the stock's numbers. As you can see, the trade was looking for something that was 130 million bushels less than where we ended up. So what does this mean? It means we're not feeding as much wheat as what USDA projected. So it basically confirmed what we've been seeing at INTL FC Stone, not just me, but it's the staff here at INTL FC Stone, that we are not seeing the shift from corn and grain sorghum over to wheat to the extent that USDA projects that we will this year. And so feeling pretty good about the estimates, not feeling pretty good though about the size of the wheat stocks that are out there that still need to find a home. The market needs to find a way to work that wheat in a feed stream at a time when we've got plenty of corn and plenty of grain sorghum. Now, the rest of the stocks report was relatively good news. First of all, on the corn, I felt like USDA, when I plugged in the census export numbers, the ethanol numbers, all of the numbers that we knew, estimated feed usage, etc., I felt like we'd be up about 100 million bushels on corn, but instead, now I say up. Back in August, USDA was projecting 1.716 billion bushels, I believe. Last year we were at 1.731. The trade was looking for 1.754, and we ended up at 1.738. So we were up from the August estimate, just not as much as anticipated, and more importantly, not as much as what the trade expected. Now, as I plug the numbers in, assuming that the census export numbers are correct, and those numbers are lagged by 6 to 8 weeks, assuming domestic food usage is similar to normal, and that we got the ethanol numbers right based on the census data through July 31 and the presumed based on some of the production numbers that we have for the month of August, this would still suggest that one of two things. Either feed usage for the 2015-16 marketing year was 24 million bushels below what USDA forecast, or that USDA overestimated the size of last year's crop by roughly that amount, or some combination. But in the big scheme of things, it's pretty close. So the question is now, what about the coming year, the 2016-17 marketing year, which started on September 1st? What will we do for feeding there? On corn feeding, USDA is projecting about a 9% increase in corn feeding from where we did in the old crop marketing year based on my estimates. I do not see a 9% increase, particularly with wheat still trying to make its way into the mix. I know it's going to be hard for wheat to do, but I still do not see that significant of an increase based on livestock numbers, 9%. USDA does some crazy things with feed numbers, so maybe they'll find a way to make it happen, or maybe they'll adjust the size of the production. But regardless, I still remain skeptical of USDA's demand numbers for this new crop. Soybeans, ending stocks at 197 million bushels, very close to where USDA was at in its August crop report. Nothing of significant note there. Now, as we look at fourth quarter feed usage or corn usage, it would suggest record usage overall, a little bit above what we'd expect on trend, but pretty close overall. So overall, feel pretty close, pretty good with those numbers. What does it mean to the balance sheet for the 2016-17 marketing year? Now, you've seen this chart before. The left-hand column shows what I'm projecting for ending stocks with the blue bar. The red line shows what I anticipate based on that analysis, what it would say based on history, the marketing year average cash price that would match up with those stocks. And then the middle line is the bar that we would expect under a bearish scenario, a bullish scenario for cash prices on the right. I used USDA acreage for all three. Did not change acreage. FSA data suggests that we could actually see acreage go up to 1 million acres, but that's still an unknown. We'll look at the October data and see how it looks coming out here in a couple of weeks. On the first anticipated, on the left, I used USDA's latest yield of 174.4. We will be coming out with our projected yield based on our survey of our customers, and we want to thank you again for all of you who participate in that, helping give us good data. Then come Monday when we release that, I'll be plugging that yield in. But for this purpose, I used USDA's yield since that's the current official number. And then on Monday, I will adjust this to our company estimate based on the survey. At 174.4 bushels per acre, based on the fact that I see feed usage as too high and exports as suspect, I pulled back on exports a tad. I see ending stocks of just shy of 2.6 billion bushels. Nothing bullish about that. Marketing year average cash price at 310 per bushel. If you raise the yield to 178, which I don't expect, but I can't rule out, and I want to show more of a bearish scenario, I basically kept demand very similar, but I did make a few changes, because obviously if you get a crop that size, you get cheaper prices, and that starts to influence demand as well. It still pushed ending stocks over 3.2 billion bushels. Marketing year average price falls below $3. If you see the yield drop all the way down to 168, here again, I don't expect it, but I still see people out there saying that that's what they believe. So I put in a 168. Typically, if you have a yield drop that low, you will see prices rise, and you will see, therefore, demand curtailed somewhat. I still tried to hold demand at least close to USDA levels and still ended up at 1.8 billion bushels of stocks. So not really bullish. Still gives us a higher marketing year average price because the lack of bearishness and money flow combined to give us a rally in there and push prices higher. But I'm skeptical of this number. I'm skeptical of whether we can do it. I'm skeptical of whether we can get a 168 or see futures trade to that level at any time soon because of the massive supplies of wheat that we have out there. Wheat's being stored right now because of the profits that can be acquired through capturing the carry. If corn prices that went that high, I have a feeling we'd start to see the carry change in the wheat market as well. Looking at soybeans, using a 52 bushel yield. Now I know with corn I used USDA's September estimate. With soybeans, the yield reports are coming in so impressive that I anticipate that the trade's going to be pricing in at least a 52 bushel yield. So while I could have gone with USDA's 50.6, I felt like trade would have shrugged it off, saying, well, it's not that low anyway. It's got to be higher. So I just went with the 52. On Monday, I will adjust this and plug in what our survey-based estimate is. At 52 million, when I look at the current pace of export sales, when I look at crush, when I look at all the dynamics together, it gives me ending stocks at 398 million, a marketing year average price at 945 per bushel. If I raise that yield to 53.5 bushels, which I think is possible, not likely, but I can't rule it out. I think it's possible for my bearish scenario. That does lower price, as you can see there, but in lowering price, it also helps fuel a little bit more demand. But for the most part, I kept most demand categories pretty close to the same as the normal or predicted category on the left. That still yields us just shy of 600 million bushels, obviously not running out of soybeans. If, on the other hand, I pull the yield down to 49 bushels per acre, based on maybe the assumption that the end of the crop doesn't yield as well as the first of the crop. I'm really skeptical that this crop is below 50 million bushels, but I have it there to show what it would take to get a bullish scenario. And actually, as strong as demand is, we don't have to drop down to 49 bushels, because one of my rules in doing this was that we need to not allow ending stocks to drop below 4% stocks to use ratio, which is what that 164 bushels is. And so I said that prices would curtail demand, both exports and crush. And so I had to lower demand in order to hold ending stocks at 4% stocks to use ratio. That pushed prices to 12.25 per bushel. Futures would rally much more sharply than that. But overall, that is possible if we have adverse weather in South America, and we'll talk a little bit more about that coming up. Looking at weather here in the United States, we see the very wet areas over the last 30 days in southern Minnesota, Wisconsin, northwestern Iowa, parts of Kansas that have been a problem. Also some parts of southern Missouri and southern Illinois and into the eastern Midwest. So we've had some very wet areas. Starting to dry out parts of southwest Kansas for the winter wheat, also parts of Nebraska and the Dakotas. Drying out a lot of soft red winter wheat areas also in the south and in the eastern Midwest. If we look at the forecast, looks basically warm. No real frost or freeze threat here as we finish off the crops all the way to maturity. If we look at rainfall, it's been pretty dry this last week in some of the saturated areas of the western Midwest that I just showed you. The eastern Midwest has been getting rain, but that's expected to dry out. Rain start coming into the Northwest once again, and that is a concern, particularly when you look at the 16 to 30 day period, keeping it wet in that area. And this is not as wet as some previous forecasts, but still wet enough to be concerned about. Primarily because look at that November forecast in the middle with much below normal temperatures across much of the eastern half of the country and normal to above normal precipitation. So we need to get the crops harvested in October. It needs to happen. We need to find a way to make it happen. And I don't think, I was asked by a reporter today if the markets have factored in any type of risk yet. I don't think so. But then I was asked, when will they? And I said, I think over the coming week or 10 days, if we fail to see the pattern dry out and we start talking about above normal precipitation, then I think we could start seeing them build some weather premium into the market. Looking now to South America, this is the main production areas shown in each one of these graphics of northern Argentina and southern and central Brazil. And December is on the left, January in the middle, and February on the right. So it's basically the summer growing season for South America. And on the bottom graphics, you see little in the way of heat signature. Some above normal temperatures in Argentina, northern Argentina, in February. But other than that, temperature is simply not a threat. I also see some above normal rainfalls showing up in here. That is something we're going to have to keep an eye on, but it's not thought to be a problem. That would be good. The bigger concern right now is dryness in southern and central Brazil. And that could be a problem we'll have to keep an eye on. Once again, they normally get more rain than what they need, so some dryness will be good, but will it exceed that? We're watching a lot of factors with sea surface temperatures and etc. The bias would seem to be with dry. That's why the forecast is certainly leading. We thought that for the Midwest in August as well, and it simply didn't happen. Now we need to see if it'll happen in South America. It may not. It may be like the United States and get through with a good growing season. So what are the take-home points? First, corn feeding for the old crop year was slightly smaller than normal, unless USDA overestimated the size of the crop. That casts some real doubts about whether we can have a 9% increase in feeding this year. particularly with all the wheat and grain sorghums available. This year's wheat feeding is likely a third less than projected by USDA. The last thing corn needs right now is Chinese corn on the market competing with it. China approved at least 2 trading houses over the weekend in order to, this week, in order to export corn. It's believed they have over 7 billion bushels of surplus reserve corn. I do not expect them to become big exporters for various reasons, but I do think that they will likely try to export some corn. The quality is not good, and their price is still above the world market. Their biggest competition right now is Black Sea origins, but they could make an indentation into our export market should they be able to get the price down and get the quality good enough. That opportunity is there. I do think that they will make some exports, enough to throw cold water on the markets. I do not expect it to be big, but it'll still be very sobering for the market. Traders should return on Monday, I anticipate, focused on the October 12 production report. I think we'll quickly move past the stocks report as one of the quieter reports as far as global impact. Strong global soybean demand does necessitate a big crop, as I mentioned, and I think that as we go forward, we'll probably see that demand continue to erode into supplies and see ending stocks come in well below what USDA is forecasting. But then again, that's pretty well known by the market. So right now the focus is what's the size of the crop. INTL-FC Stone's updated survey-based estimates will be released Monday afternoon. So with that, that's all the presentation I have. We took basically a half hour to do that. That gives us some time for question and answers. So I'm going to pull up the questions now and start through them. Go ahead and type in your questions on your screen if you have them, and we'll see if we can get through these. Excuse me. Question number 1 from Juan. Will the slideshow be available to the general public? For those who register on our site, it will be available hopefully later today. And in fact, we have a large number of viewers who come in and watch this after the fact. So that's what we anticipate. A lot of people simply can't break away during this time from their responsibilities. Max writes, the Chinese are buying very big. Apart from Latin America, not selling, could they be afraid of a Trump presidency, therefore preempting possible difficulties? Well, I can see how you could make that argument. Certainly, Donald Trump has made a lot of comments in regards to China during this campaign. But I don't see anything out of the ordinary of what I've been saying. Keep in mind that a year ago, I took a lot of criticism for projecting exports to be around 1.850, 1.825, 1.850 for the marketing year, and they ended up well above 1.9. But a year ago, a lot of people were in the 1.65, 1.7 billion because they felt like China wasn't buying. And I said it's going to come back. And I really see what China is doing. Last year was an aberration. There were some reasons for that. I really see them really purchasing soybeans right along the normal pattern. Now, corn's a different story. Here again, driven by the big surplus that they have of that they'd like to get rid of. It's expensive for them to maintain. But from the food-based commodities, I do not see any change in behavior at this point based on China's perception of the election. Lincoln asks, could there be any catalyst for wheat to go lower than we are now? Wes, are you out there listening? A friend from Texas Panhandle, where we got lots of wheat. Many of you probably saw the picture in central Kansas of a wheat pile on an old Air Force Base landing strip, more than 6 football fields long. There is a lot of wheat out there. And can it go lower? It can. It can. Am I projecting it to go lower? No, I'm not projecting it to go lower. I would put the odds at 50-50, maybe 60-40, with 60% saying that the bottom is in. That's for the board. The cash price, though, I think is going to continue to struggle. The more wheat we take off the market with marketing loan and with just hanging on to it because of the carry and the commercials can get a return from the carry in the market, we should start pulling the basis up. But as we pull the basis up, that's when we start becoming less competitive on the world market, and we have more trouble feeding it as well. So this market does continue to be vulnerable, and I would not want to, well, let me throw one more factor in. If the corn crop comes in bigger than expected, that could also weigh on wheat. Because if corn goes down, wheat has to respect that because it needs market share. If wheat goes down, corn has to respect it. So the two are married at the hip. Lincoln asked another question. Hasn't that already been priced into the market, though? Yeah, it has. That's why I said probably 60-40 at the bottom's end. But we don't know the size of the corn crop yet. We think it may be getting a little bit smaller, but we could be surprised out there. We've heard some outstanding yields. So I know. I've heard the poor yields as well. I'll get plenty of messages on that tonight on Twitter. But overall, we don't have any guarantees. So I think that we're probably the bottom is in on the board, but I certainly want to go there and guarantee it at this point. There's still factors that can weigh us down, as I indicated. Okay, now we look at, Jeff says, have acres lost to flooding in Minnesota and Iowa been taken into consideration in USDA numbers? No. That will affect harvested acres. It will not affect planted acres. Will eventually show up in FSA acres, but the market doesn't care. For those of you affected, it's a big deal. It's a real big deal. But when we're talking about the possibility of ending stocks at 2.6 billion, unfortunately, that's not a factor for the market. And so far, with the data that's out there, I don't see that being a big factor for the market. Any other questions out there? Any other questions that you might have? Give you a bit to ask any more questions that you might have. Overall, today's report was fairly tame compared to many September 30th reports that we've had. And so that allows the market to primarily focus on the October 12th production estimates, with private estimates coming out starting next week, led by ours. So, okay, Paul gets one in right under the wire and asking, are the corn lows in? I like the behavior of the market today. The low for the December corn, I believe, was on at 314 3/4 on August 31st. Is a low in? I don't know if it's in. Is there a chance that it's in? Very much so. And I think bottom line, it comes down to the production estimate that we get on October 12th from USDA. If that production estimate comes down and we do not have anything else dynamically on the demand side that change the environment, I think the market would like to consider it in. I think, though, that we've got a lot of factors that could continue to hurt us, including the outside markets, including the economy, including risk aversion of the funds. And so no guarantees on it. But that's from a pure fundamental standpoint, it's very possible that we have put the low in. Is ethanol going to be a bigger factor than exports in corn this year? I think they're both going to be a factor. I look for ethanol to be solid. I think we'll be exporting ethanol. When I look at the dynamics there from a global standpoint, we don't have time to go into it all this year. I have a little bit bigger ethanol estimate than what USDA does. Overall, no, we're not making big changes because of the blending wall. I think ethanol is going to be solid, and I think exports are going to be solid. I still question whether they'll be quite as big as what USDA says, because I'm expecting significant competition from Argentina later this year, from the Black Sea, and possibility exists for China to come in as well. Bean market short term, I think we go sideways cautiously until we see how big the crop is. If the crop is much bigger than currently projected, we could make new lows. If it's not, we'll get a sigh of relief. We focus back on the demand side, focus on South American weather, and probably go up from this point. Basis outlook, how fast are we going to harvest? That's what it comes down to. We have priced in expectations of big crops and storage problems, some of which are starting to happen already. If rainfall slows the harvest more than anticipated, we ease those basis concerns and we allow basis to start firming. If the weather clears up more than expected, the crop comes to town all at once, it comes in big, some grain gets pushed on the market, has to sell, and we see new lows in basis. We're seeing soybean basis really crumble this week, corn basis starting to come under some pressure. I think we still have more downside risk to our basis, but we certainly saw that in our September crop report survey that all of you filled out. I think you saw the results on that. But that was a couple weeks back. So where are we now? I'm not ready to call basis lows in. I think that the weather over the next 10 days to 3 weeks will have a lot to do with determining whether the lows are in on basis or we're getting close to it at this point. The speed of the harvest. Unless we get one last quick question coming in, I think that that'll probably do it. I want to thank you for being with us today once again. We'll be back on October 12th with that crop report. The big numbers we're going to be watching is the incorporation of these stocks numbers and how they incorporate that into feed usage for both corn and for wheat. We're going to be watching to see what they do with soybean export numbers. More questions here. Let's get them in. Steve asks, mold damage in corn is being reported in Eastern Corn Belt. Frankly, it's being reported across many areas of the Corn Belt. Is there mold throughout the belt, and might that have a market impact? I think the biggest concern for the mold that we're hearing is the storability of the corn and whether that's going to create a problem there. So we may be trying to, and this goes back to the basis question, we may see more of a push to try to get corn pushed out to the end user a little bit faster, dumping a little bit more corn on the market, farmers not wanting to keep it in the bin, particularly Diplodia doesn't store very well. So that's a concern going forward. But at this point, I'm going to say I do not think that it will be a major market factor versus where we are now, but it's still too early. We're still in the first quarter of the corn harvest to say that definitively. Soy meal export program, I think it's going to be solid. Argentina still has problems. We're seeing additional business come to the United States. I've been a little bit disappointed with the recent soy meal sales and export shipment pace, but I do think it'll be solid. We are backing up DDGs a little bit, but overall I think we'll see good meal demand. Protein is the name of the game in soybeans, in the feed sector in other words, and in wheat. So with that, I think we'll call it a day. If you have more questions, you can certainly send them in through your broker. We're glad you were with us. We'll see you on October 12th at 2 p.m. Central Daylight Time. Looking forward to seeing, at least hearing from you all then. Thank you very much.